Step one, wake up early, gonna rise with the sun. Step two, get some good, some food in you. Step three, think real hard about what you wanna be. Step four, everybody just do your thing.
Wake up, today's gonna be a good day. 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 Wake up, today's gonna be a good day.
Good morning, and welcome to Good Morning Crypto, where we turn your early hours in the morning into your edge and financial freedom. Today, I've got a few headlines. One of them is going to be about the FTX repayments that are scheduled for next week. And then I've got another headline that's going to be touching on what the Fed is looking for their interest rate decisions going into this year. Might be a potential that we see some rate hikes in this year if the economy kind of heads in the wrong direction. But let's dive on in and get you prepped for some success today, because the markets are moving already. So we got the stock heat map pulled up. For the beginning, we've got Apple, which is sitting 2.41% down from its close on Friday in the pre-market, getting hit kind of hard, down 8% right now. In the pre-market, we've got Nvidia sitting down at 3.08, closed 3% down on Friday. So big losses for Nvidia. Could definitely see some of these indices getting hit kind of hard when the market opens. We do have Berkshire Hathaway sitting down at 2.03% from its close, and in the pre-market is down 0.5% right now. We do have Amazon, which was also sitting down from its close on Friday, down 1.44%, sitting down 1.07 right now. We've got Eli Lilly sitting up 1.61 from its close on Friday, getting hit hard for the pre-market, down 0.61%. We've got ExxonMobil, which was sitting down from its close on Friday as well, sitting up 0.67% in the pre-market right now. We've got Tesla, which was sitting down pretty neutral for its close on Friday, down 0.05%. And the pre-market getting hit hard, just like Nvidia is, down 3%. We've got Microsoft, which was sitting down 1.32% from its close on Friday, is looking down in the pre-market as well, down 0.78. We've got Google, which was sitting down from its close 1.14 on Friday. We've got it sitting down 0.87% in the pre-market. Meta was sitting up off of its close on Friday, 0.84% off of some news. It is now sitting 0.88% down in the pre-market. For crypto, we're looking pretty red so far this morning. We've got Bitcoin down 4.07%. Ethereum's down 6.7%. We've got XRP just dropped below Tether in market cap and sitting down 6.66. We've got BNB sitting down 4.8. Solana sitting down at 6.94. We've got Cardano getting hit pretty hard, down 8%. We've got Dogecoin sitting down 6.13. Tron is sitting down 6.99. Avalanche down a whopping 8.71. We've got SWI sitting down at 9.1. Toncoin is sitting down at 5.72. And Stellar Lumens also getting hit pretty hard, down 6.38. For the economic calendar today, we don't have too much heavy data coming out of the U.S. We do have the monthly budget statement for the U.S. federal government, but that's going to be about all for today's data. Most of these moves are going to be in preparation for tomorrow's data. We do have core PPI month over month coming out, core PPI year over year, PPI month over month, and year over year. These are forecasted to be heading in the right direction for some of them, like PPI month over month. Not the core is looking like it's heading in the right direction. The core is ticking in the wrong direction, though. We do have core PPI year over year also looking like it's going to add to that mixed bag up from 3.4 forecasted at 3.7. So kind of a mixed bag on some of that data, and it's not looking overall positive. Heading in the wrong direction on some of this, which is also adding to some of my sentiment that if we continue to head in the wrong direction, which is what some of the Fed has said, if we hit some of those 3% targets, we could go back into some rate hikes, which was definitely not the move that we've been wanting to see. We wanted a slow rate cut cycle, and that is not what they gave us, and is definitely kind of heating things up just a little bit. We'll have to keep an eye going on the rest of this week's data, because for Wednesday we do have that inflation data coming out, not just for the US but for a lot of the world. The UK has theirs coming out Wednesday before we get ours. We will get core inflation rate month over month, year over year, and CPI on Wednesday. So a lot of these moves for today are going to be in preparation for these two data drops. We do have core inflation rate month over month, which is looking like it's headed in the right direction, but the year over year is staying solid at that 3.3%, which is not the direction, which is not what we kind of want to see on things. Inflation rate month over month is looking solid, staying at that 0.3%, but that year over year is headed in the wrong direction, from 2.7 forecasted to be that 2.8, which once we kind of hit that 3% range, we would be looking at some rate hikes. So just something to keep in mind for this week. We do have a lot of heavy data. Let's hop over to that fear and greed. Let me get that pulled up. We've got the stock side sitting at 26 in fear after that sell-off on Friday. For the crypto side of things, we are down a point, back in green, just sitting at that 61. Could very easily, after some of today's sell-off, be back at that neutral range and maybe hit some of those key targets I've talked about. We do have the liquidation heat map. Let me refresh that, since we've got a big move to the downside after I had opened it up this morning. We did take out some of this liquidity that is sitting below us and are starting to stack up some more. This is the monthly chart. That liquidity was residing right around that platinum pocket. If we zoom that on in to the 2 week, you can kind of see that we're taking out that liquidity to the bottom side of us and are looking pretty light in either direction. So really waiting to see that bottoming point that I've been talking about for the past week and a half or so. And it looks like we're finally getting to that point where we could see that bottoming. We do have the 1 week, which is sitting with the liquidity to the top side of us as we've taken out a bunch of this bottom side liquidity. There's about 81 million sitting at 95,938, so almost $96,000 there. The 3-day is looking pretty nice. There is no hot spots to the top or the bottom of us, so a lot of these moves are going to be in preparation for data. You do have the 24-hour looking like we've just grabbed that liquidity that was residing to the bottom. We've got a light hotspot sitting at 92,544, which could be a quick grab on a move up before we continue a little bit of a downtrend there. Let's say hello to the chat. We've got Jesse Gluck in here. Good morning, good morning. We've got All Set. Good morning, All Set. We've got Darren Does Things in here. Good morning, good morning. I see Kyle Fields in here as well. And Mark Dutch. Good morning to you all. Hope you're having a great Monday so far and are not too scared about some of this price action. It's looking like we might see some great buy opportunities for those hodl bags. I've got the daily chart pulled up for Bitcoin. As you can kind of see, we are ticking back down on our prime oscillator, getting that curvature to the downside as we're seeing a bit of a tick up on that selling. You've got your MACD, which is creating a nice width from its indicator line as it's broken below that zero line here, kind of indicating that we might see some downside action during this week, especially considering some of this data is not looking overly positive on things. You do have the 4 hour, which kind of shows that we could see a little more downside before we get a little move to the upside. You do have some bottoming signals here starting to come up. The oversold signal just flashed at about 7 o'clock this morning. You do have your selling pressure on the 4 hour, which is ticking down just a little bit. Although that doesn't mean that the bottom is in just yet. You do have your MACD, which is getting a little bit of curvature here, but we've just broken the platinum pocket and kind of indicating that we could go a little bit lower here, especially with the 4 hour looking bearish and the daily looking a little bit bearish. We've created a bit of a fair value gap on the move to the upside, and that liquidity was residing right around the middle of that fair value gap. So definitely a push up to the upside and then a drag back down could be something you see as you really wait for some of these reversal signals to start flashing on these higher term time frames like the 4 hour and the 1 hour here. The 1 hour already has some of that curvature on your prime oscillator. We did get a reversal signal back here, which was completely ignored, and I would wait for another reversal signal to kind of flash as we're waiting on this money flow to kind of slow down just a bit here. You do have your MACD, which is getting some nice curvature as well as the prime oscillator is. So really waiting to see how high this pump can kind of go up. And I do think when I showed you that daily chart that midline of the fair value gap, which also comes into play on that liquidity, would be the grab point for the shorter term before we really see some continued downside, especially with how bearish all of that data is looking. I did have that article that I talked about last week where some of those short-term and mid-term buying points are going to be to the bottom side of this platinum pocket. And this is where I've had these drawn out for quite a while now. And they're not beautiful numbers to see if you're investing, but they are beautiful for buying. It will scare a lot of people if we get down there, especially if they bought way back here, or if they bought way back here. But it's a great buying opportunity for the long term. We've got 88,759 and 86,800, which are those shorter term and mid-term buying points where we can start seeing some real green liquidity coming into the markets. I do expect a little bit of a move to the upside this morning as that 15-minute has already flashed 2 reversal signals here, and we do have that prime oscillator ticking back up and in light red here. We've got your MACD getting that same curvature, really looking to get that cross on the indicator line on the bottom side of things. This platinum pocket's going to be a little bit of a battle here. We did drop right below it here before the show. That's at 91,100 point, where we might see a little bit of resistance and some cooling off before we try to break that MACD line across the indicator and try to clean up some of this liquidity that's sitting right around that 92,400 mark. We do have another little spot above that where we could start to see a little bit of resistance if we were able to break above it, and that's going to be that 92,700 where we've got a lot of equal candle bodies here. Let me draw that line out sideways so you can kind of see it there. Those equal candle bodies indicate a lot of selling, a bit of a pause point right there. Can you talk about XRP? I can definitely take a look at that a little bit later in the show. Mark Dutch says, I'll be lurking in the background, but of course I smashed the like. Thank you there, Mark Dutch. I did see Baba Yaz coming in here as well. Good morning, Baba Yaz. And Energy Gods the Porch. Good morning. That 3-month chart looking juicy. Was that on Bitcoin? I can zoom that on out just a little bit. I rarely take a look at higher term time frames, but unless that was on XRP that you were talking about, the 3-month chart. We do have a lot of room to run on the 3-month if you're looking at Bitcoin now. As you can kind of see here, a lot of width from that. So indicating that this is just a short-term pullback and there's plenty of room to go on the upside. We just ticked green on a lot of that prime oscillator there. So really looking for the quick cool off before we get that move to the upside there. Let's hop into this news article that I had pulled up. This is what it could take for the Fed to hike interest rates. Good morning, Jay Violet. Hope you're having a great day. Some economists are now contemplating what was previously unthinkable, and they are focused on the Personal Consumption Expenditure Price Index. The surprising strength of the U.S. job markets and the stickiness of inflation have led economists to mull what was once unthinkable, a possible interest rate rise by the Federal Reserve this year. We now think the Fed's cutting cycle is over. The risk for the next move are skewed toward a hike, said Abdiya Bihav, a senior economist at BofA Global Research, one of the first Wall Street economists to discuss a hike. See also, U.S. stocks that's a different article. Most economists are not willing to go that far. Many are in the camp of Ryan Sweet, chief U.S. economist at Oxford Economics, who said a very long and potentially uncomfortable pause is more likely than a hike. Not long ago, the consensus on Wall Street was that the Fed would cut rates several times in 2025. Activity in derivatives markets show traders now only expect slightly more than one rate hike cut this year. Economists at Goldman Sachs and JP Morgan now see the Fed on hold through June. The Fed has now penciled in 2 cuts for this year. While a hike is still considered a long shot, the odds of one are no longer 0, said Gregory Dacko, chief economist at EY Parthenon. This has led to the question of what it could take for the next move to be a Federal Reserve to be a rate hike. Most economists, including Bihav, said that a rate hike would be in play if inflation, as measured by the core personal consumption expenditure index, moved back above 3%. The Personal Consumption Expenditure Price Index has been the U.S. Central Bank's preferred inflation gauge as it has battled the rise in prices over the last few years in the wake of the 2020 pandemic. Its core rate, which excludes gasoline and food, ran at 2.8% annual rate in November and has been below 3% since January. Bihav has said he expects core PCE inflation to soften to about 2.5% rate in the first few months of this year as strong data from 2024 start to fall out of the data. So a move up after that would be remarkable. Go, Going from there to 3% would represent a pretty sizable shock, he said. Sal Gutierrez, senior economist at BMO Capital Markets, agreed that a 3% core inflation rate would get the Fed's attention, but said the labor market would also have to be a lot stronger for the Fed to move. We're a long way from that, he said. And I know that this is something I talked about when they did that first rate cut of 50 basis points, that the potential for overheating in the economy was very plausible with a rate cut that big and then a continued rate cut after that and a rate cut after that. It really kind of bodes for the economy that you might see some overheating. It's the same thing that we saw in the UK, the European Union, we saw it in Canada, and we've seen it around the world. As they've been cutting rates, we have started to see an overheating on things and it be extremely sticky. And with a big rate cut in the beginning, we did see a nice strengthening of the dollar, which kind of cuts out some of that negative parts of the inflation for the U.S. consumer, but it's not overall positive, especially when it's not a big move from where we're currently sitting to 3%. And you've already seen the UK tick up. I think it was 0.3%, and at 0.3% from where we're sitting right now would put us at over 3%. And that chance for a rate hike would be back in play. So I've warned about it. I know Piper has talked about that too. And this is the wrong direction for things. And this rate cutting cycle should have been a lot slower. And it kind of worries me just a little bit that I'm not the only one that's kind of talking about it. I know Piper talked about the potential, and now you have some big name economists talking about the potential of a rate hike and the economy really heading in that wrong direction. I did see Darren does things, no rate cuts up until at least March in my view. And I think it's a little bit further. We're really going to have to see how the new administration really ticks things, because there is that potential, if you are levying tariffs against other countries, to see that inflation heat up just a little bit as it's already heating up. And so that 3% target that they don't want to see, that would really get the Fed's attention, would easily come into play. And that's very worrisome. I know Piper talked about selling a lot of assets in Q1, and that's quite in line with a lot of what we've talked about, especially with the new administration. So about to be smacked in Trump's face as he takes over from current administration. Yes, and especially with the data being skewed in a lot of ways. It's been left for Trump to have to deal with some of this, and we'll kind of have to see if he can swing things back in the right direction. It's not going to be beautiful. It's going to hurt the economy and for a little while. Recessions are never pretty, and especially those longer term recessions, like a year, would definitely be something to see as we hit some of these as we hit some of these data points that we don't want to see, like inflation back over 3% for core PCE, and core expenditure being in the wrong direction. It kind of looks a little worrisome for things. We will have to wait to see the long-term effects of some of these policy changes. We do have this other big article, which was what the title for today's show was, because there's a lot of tie-in for next week to see continued outflows on some of these projects. FTX to begin distributing 1.2 billion to creditors after Trump's inauguration. FTX is preparing to distribute more than 1.2 billion in repayments to users of the bankrupt former cryptocurrency exchange. FTX, once the world's second largest centralized cryptocurrency exchange, is set to begin repaying defunct users who have been unable to access their funds for over 2 years. Users of the exchange who are owed up to 50,000 worth of digital assets have until January 20th to fulfill their repayment requirements. FTX will likely start repaying claims of up to 50,000 after January 20th, according to popular FTX creditor Sunil, who is part of the largest group of over 1,500 FTX creditors, the FTX Customers Ad Hoc Committee. January 20th, FTX has been given until January 20th to fulfill pre-distribution requirements for the initial distribution. Repayments likely won't start before then, Sunil wrote in a January 11th X post. The January 20th deadline coincides with the U.S. President-elect Donald Trump's inauguration, which has sparked expectations of more crypto regulatory clarity and the possible acceptance of the Bitcoin Act. The act proposes creating a Bitcoin reserve for the U.S., the world's largest economy. Combined with the new capital from upcoming FTX repayments, January 20th could catalyze the next leg up in the 2025 crypto market cycle, which could see Bitcoin surpass 200,000, according to some industry watchers. Will FTX repayments lead to market volatility? Users claiming up to $50,000 are the first group of investors to receive repayments, according to FTX restructuring plan, which was approved in October 2024. The plan stated that 98% of FTX users could expect to be paid 119% of declared value of their funds. However, some creditors have criticized the repayment model, which reimburses claimants based on cryptocurrency prices at the time of bankruptcy. Bitcoin prices, for example, have increased by more than 370% since November 2022. While some crypto investors expected heightened market volatility, the FTX repayments are a crucial step for rectifying past damages and repairing the industry's reputation. The repayments will lead to mixed investors' reaction depending on individual risk appetite, according to Andy Lin, author and intergovernmental blockchain expert. Lin told Cointelegraph that some of the repayments may flow back into other cryptocurrencies. Small investors who've been hit hard by FTX collapse might be more inclined to sell for financial security. Those with a bit more faith in the long-term prospects of crypto might stick it out, betting on future growth. It's all about individual circumstance and risk appetite. And this is something we've all been waiting to see. You know, it does bode well for the crypto space that we do see these repayments heading in the right direction on Mt. Gox and FTX and other exchanges as well that have went defunct or been hacked. And this'll look nice to investors, and people who have been mad about FTX might stay in the space. You will see some sell off on some of these projects like it talked about, but it is a positive to see in the crypto space that things are being made right. Not fully right, as you see they are going off of those 2022 prices, which is a giant disparity from current prices, but at least they are getting something back. And this is why security is very big in crypto. You should always hold your own assets and don't hold things on exchange. All right, let's hop into some of these TradFi things that I was looking at for the morning. If there are any alt requests, I did have XRP on the list. Go ahead and drop those in the chat for me, and I'll take a look at them after I take a look at a few of these things that I was looking at this morning. You do have silver, which is getting a bit of a rejection off of this indicator line, off of this support line that I had wanted to see turned it back into some support. Unlike gold, it was unable to break above and maintain that range, so we are looking at some lower prices on silver. You do have this 382, which is sitting right below us at $30.25. So I would look at that for another bouncing point as we kind of get that move to the downside. You do have gold and silver and the dollar, which like to move together sometimes. So that as the rest of the market is selling off, it is those more reserve asset there, especially as you're seeing some of these bonds that have been getting bought up as well. You have gold, which is looking quite nice. It did just break below that line of support that I wanted to see held, but we have plenty of room to bounce here on the bottom side. We did break back into this fair value gap that I had drawn from way back here, but definitely got a little bit of a bouncing point here at $2,651, which was the midline of that fair value gap. If we end up breaking below this 382 here, which was on a Fibonacci extension, that's going to be that 2,656 mark, and we're just waiting for some more reversal signals to kind of flash here. You have the money flow, which is slowing down here in the red, which is nice to see. You're getting the curvature here, some oversold signals, but no real reversal signals just yet flashing on gold. Waiting for that some more curvature and some cooling off here as we start seeing that money flow slow down on some of the sell-offs. You do have your MACD, which has crossed your zero line and is looking to kind of go just a little bit lower here. But as you do see some of the sell-offs on your more traditional side of things and in crypto, you normally see some of these more reserve assets get bought up. So gold is that hedge against some of your other more risky assets. So definitely could see a little bit of some buying on gold here down at that 2,656 range to about the bottom side. If we break lower to that 2,635 range. All right, let's take a look at the S&P 500. You've been seeing a lot of sell-off on S&P as well. You did get some nice topping out back here at the end of December and have continued to make lower highs and lower lows all the way through the beginning of the year. We are sitting in a CME gap here, which I have been looking to be closed for quite a while now. You do have that midline, which we are seeing a little bit of some breathing room being made on, and that's that $5,824, which looks like we could potentially lose. You might see a quick bounce to the upside here on it. You do have the golden pocket, which is sitting right there at 5,855, which we rejected off of last time. As the money flow is looking quite red on here as well, just switched over from light red to red and is looking to kind of increase with the rest of the market. You do have a bit of some curvature here on your MACD, But as we've been seeing the sell-off in the pre-market on TradFi, I would expect to see the same thing on some of these indices. You might get a little bit of a break above that, try to hit the top side of this CME gap from the weekend, and that's going to be that 5,889 before a real continuation on our retracement. I didn't see any other asset requests. If anyone does have any alts or TradFi things they'd like me to take a look at, go ahead and drop those in the chat. I do have the dollar pulled up. The Dixie is doing quite nicely. I did talk about wanting to see us break above a resistance line that has been a long-term resistance for the dollar. Let's zoom that on out to the 4-hour. As you can kind of see here, we got multiple touches on it and started to make a upwards trend of support here. I was looking at the break above it, and we got that nice break above it. I will have to redraw some new points for the dollar to kind of get above, but I wanted to talk about it for a brief second. You are seeing some sideways movement here on your prime oscillator, but your money flow is looking quite nice on the 4-hour. You do have plenty of upside movement on that MACD line as well. The 1-hour looking a little bit toppy. So got some reversal signals here, some divergences starting to come in play. If we make another higher high here, could stack up another divergence as things are kind of cooling off on your prime oscillator. Your MACD is also at that same point where we've got some divergences here and looking to get that real cross of our indicator line and have a bit of some cooling off points. You do have an area right below us where we could see some bouncing at 109.64. Could continue to see some more downside pressure on that range as well, and it turned into some sell-off. If we break down below this 109 about 56, where there was a lot of selling pressure right here on this candle, and again the one before that. And above that, we saw lots of selling pressure as we broke above things and continued that downside trend back to this 109.35 cent point that I've talked about for quite a while. If we do end up losing these, turning that into some strong support would be a move I would look for the dollar. I did see radium requested. If there was an exchange you'd like me to take a look at that on, go ahead and drop that in the chat for me. All right, I have XRP and radium, and I see Alexandra G here in the chat. Good morning, Alexandra G. Go ahead and drop those mod queen emojis in the chat for her. All right. I had XRP requested, so let's take a look at XRP. Let's scroll on up. There we've got XRP. And let's zoom that on out to the daily here. You do have us breaking above that 236 for a brief second before we kind of broke below things and are looking a little bit bearish here. You do have your money flow, which is pretty red for the daily. You're seeing that MACD line right on top of that indicator line on the top side of things and looking for that break below. Reversal signals flashing on the prime oscillator. Still looking a little green on that prime oscillator though, so could see a bit of some breath to the upside here before we really continue that downtrend. We do have nice higher lows being made here, but a potential break of trend is it could be heading our way for the next week or so, with some of the data looking kind of rough. Let's zoom that on in to a 4 hour and kind of see what it's looking like. You did get some nice positive inflow coming in as we saw all of this sell off though. So definitely a little lagging behind on some of that money flow and slowing up on it, looking for some outflows to kind of come in on XRP. I see Lunar Beaches Crypto in the chat. Good morning, sir. Hope you're having a great Monday so far. And Jeffrey Stonesire saying good morning, and dropping those otters in the chat. Good morning to you, Jeffrey Stonesire. All right, XRP looking all right on the 4 hour as it's kind of moved back down. You are waiting on some reversal signals. You've got this 382 sitting right below us, which could be a nice point of buying. You do have that $2.28 for that 382. I would look at potentially breaking that and coming a little bit lower. You've got some buying pressure here at the $2.24 and again at $2.20. Let's zoom that on in to our 1 hour. Lunar Beacher is saying we going down, and I definitely talked about all of that at the beginning of the show. It was looking kind of rough for things. We are seeing TradFi selling off very, very hard in the pre-market. Nvidia sitting down 3% in the pre-market on top of its 3% loss from Friday. So looking at some of these indices to kind of get hit hard as market opens, which I'm sure Piper will talk all about on his show at 9:30. Especially with some of the data that I had talked about from earlier that we'll be seeing this week. I think he'll have a much better breakdown on things because it looks a little bit worrisome to me on some of the data that we're going to be seeing, and I do think we see some continued sell-off. And I had some bottom side targets on Bitcoin that I haven't necessarily wanted to see hit, but I think we do see hit. You are seeing a little bit of some cooling off here for XRP as it looks to make equal candles here on the sell-off candle on the hourly. You are seeing some reversal signals start flashing, some oversold signals start flashing, getting some curvature on our MACD. Yeah, thank you for that, Lunar Beaches morning market report. My brain's a little bit, it's running a little bit this morning. That ADHD is kicking my butt. So we do have that a 382, which is sitting right below us, which I do think would be the overall bottoming point for this little move to the downside. I do think this is just a cooling off candle and allowing for some more downside movements as we're seeing in the rest of the market. You have the 15-minute looking like it's looking to break a little bit higher on this. You do have that $2.41, which would kind of be the point I'd look at for that continuation to the downside. You do have equal candle bodies there and some wicking to that point as well. So that move to the upside, probably very short-lived on this 15-minute. You do have the prime oscillator, which is ticked to light red. Your money flows looking extremely red here, though, and starting to tick back up as well. As you can kind of see, got a brief move up, kind of some slowdown on that selling pressure, and getting that curve back to the upside. So really waiting to see that rejection point back up here at that $2.40 range before a continuation back down to this 382. All right, I had radium requested as well. Let's see. Radium, and it's been a while since I've looked at this one. Let's zoom that on out to the daily, kind of redo some of this. let's see. Let's redraw that retracement. All right there, the lows before the move on up. And we've got to move on up there, up to that $6.50. And as you can kind of see, we've rejected off of that 236 here and are looking below the golden pocket here. There is a lot of buying pressure here at the $4.20. Let's get that line drawn out. Got $4.20 being a potential bouncing point for radium. You do have a lot of negative space below that. There are some wicks coming down where we have $4 and about 5 cents being another point we could see. Let's make that one horizontal. Got $4.05 being a kind of a last hold point before we get to that platinum pocket sitting right at $3.90. All right, let's zoom that on in to the 4 hour. We've got plenty of room to continue on that downside for the daily there. So let's see what that 4 hour is telling us. We are heading back down and seeing a lot of selling pressure here on radium. We've got that break below our indicator line on the MACD, getting kind of some sideways action on it though. So definitely waiting to see a little bit of some buying pressure coming in here on that $4.20 point that I had talked about, which could be a brief move to the upside and back to this golden pocket at $4.45 before a continuation of trend to the downside. Let's zoom it on in just a bit. See that 1 hour. We've got money flow slowing up on those outflows for the 1 hour, waiting to see some reversal signals and some oversold signals, which I do think would start to show up kind of at that $4.20 range. You do have a lot of lower highs and lower lows throughout this whole trend, and we're really going to need to see that money flow on our higher term time frames kind of switch over to that inflow. But as the rest of the market is selling off, I wouldn't think it'd be any different for radium. You have the 15-minute getting some rollover for the morning. I didn't quite make it to that indicator line, and we're making some more width from it. Got that bit of a curvature on our prime oscillator after a couple reversal signals and a slight tick to the green, but we've got that money flow increasing on our selling pressure as well. That's where it's looking like we're gonna falter right at that golden pocket if we make that move back up to the upside and continuation down to that $4.20 point where we saw a lot of buying pressure back here. Just overall kind of looking a little bearish here. I didn't have any other alt requests, so I'm gonna wind the show down a little bit early there. Give people time to take a look at Crypto Billy's video before we all hop over to Alex O Crypto Show. Let me drop that link in the chat for you. If you haven't been watching Crypto Billy's morning motivational videos, I would definitely check them out. They are quite nice, and I end my workouts listening to them every day, and it's a nice way to kind of get that final motivation of the day. He's got a great breakdown on things, and I love his outlook on life. All right. Thank you to everyone that tuned in today. I will see y'all in Alex O Crypto's chat in about 10 minutes, and then I'll see you all at the morning market report with Piper and OC, and we do have four other shows for the day with Trade Intuition and the Trade Academy. We've got Lunar Beaches Crypto and Marcus After Dark at 11 p.m. If you didn't check out the last one, go ahead and bookmark that so you can give that one a watch. And we've also got TradeFly and FD White with the Crypto Nightcap at 8 p.m. Eastern Time. Make sure to hit that like button on the way out if you haven't hit the like button, and subscribe so that you get those notifications every time Piper Academy goes live. Make sure to wake up because today's going to be a good day.